Hello, 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 everyone. Mike Arnold here, co-founder, Pat, trading partners, along with Bob Iacchino. How is everyone doing? Market pullback continues. We got a lot of things on deck tomorrow. Hey, Patrick, good snowy afternoon. So I guess it's snowing where you are. The winds are picking up here and the temperatures are gonna set to drop. Dog walk tomorrow morning is not going to be fun. Hello, George. Hello, Connor. And everybody hiding in the background. How are you doing? Hey, Dr. M, glad you could join us today. How's it going? Thank you for being here. So, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, ringy dingy that bell. Let's get going. Consumer confidence roughly coming in line. We talked about everything else before in our preview show this morning. And, oops, what happened here? Why did that not refresh properly? Well, let's get down to it. There we go. The Dallas Fed Services coming in a little better. I said Fed Services. Boy, whew. I got to get my speaky working. So, Fed Services coming in at minus 11 versus minus 13. Revenues index was down also, but relatively minor compared to, I don't want yesterday. Wow. Don't want the time machine. Tomorrow, we got the ADP employment numbers, very minor, but then we got 7:30, 1 hour before the open, 7:30 Central, GDP growth rate, the second estimate from the third quarter. Isn't that a handful? Second estimate, third quarter, expected to come in 2.7. Would not be surprised to see it even higher than that. What else do we have? We got some core PCE prices. Going to be interesting to see how much that contracts from previous. They're forecasting it down 0.2%. Then what else do we have? A lot of other backup info. And we get pending home sales, the JOLTS numbers coming out 30 minutes after the open. And then, of course, crude. But the big thing is then Powell speaky. I think Bob just doing it, so I got to say speaky. I got to adjust my language now. And Fed's cook. And we have the Beige book in the afternoon. Also, remember, the quiet period officially starts December 3rd. So we've got to be winding down the Fed speak this week, because we have the rate hike, which right now is 6-7% favoring the 50 basis points on the 14th of December. So the quiet period is roughly that 10-day window. Apple continuing its pullback. Amazon reversing its course over the last little bit and pulling back. Oil and energy bouncing pretty well. So that's about it. Nothing else. What was the real estate? The sector leading the move up today. I have nothing else to say. Followed by energy and basic materials, technology on the weekend. We already went through that. Fear and greed, still in greed mode. Earnings, I have not had a chance to really focus on them yet, but we were looking for CrowdStrike, Intuit, Workday, and Hewlett Packard Enterprise and NetApp. So those were the little things. Tomorrow morning, we got XPeng, Petco. The one I'm going to be looking at is Hormel. So, and by the way, that's not a joke. I'm actually going to be looking at Hormel. And then after the close tomorrow, Snowflake and Salesforce. All right. What are we down right now? 20 basis points only in the S&P. Let me get, let's see. Hey, Nas Industry, thank you for being here. Where are we now? Hey, Daniel, let me get the Bob on here. The Bob. There we go. Bob, it's been a long time.
It's been a while.
It has. Anything going on that's new with you? I mean, when's the last? Well, you were on what? A week ago?
A week ago today, yeah.
Wow. And you think we've survived this long without you?
I'm actually shocked.
I'm surprised that we weren't down to like 10 subscribers.
I'm more surprised than you are.
I guess did you? I did not have a chance. I was way too busy. But did you watch the World Cup match this afternoon?
I had it on. I had the sound on in the background, so I saw the goal, and I had the sound on in the background. I had it on my computer, and I had these things on. So I was listening to the sound, but I was working on the computer that I'm staring at right now. Um, and then, yeah, I mean, I didn't really watch it, no, but that's one of the beautiful things about, whoa, one of the beautiful things about soccer is you don't have to watch it. You just, there's a couple plays, and that's it.
Well, you hear the crowd go with a goal, and then you can watch the replay of the goal, and then you
Right.
can go back to working.
I will say that the replay of the goal not as exciting as the goal, but um, yeah, it was fun. It was fun to watch.
All right. So, hey, Ted says, "What's bacon, Bob? Hope you are well."
I am, thanks, Ted. I'm retired from baking for a little while. We'll see how long, maybe till Christmas. We'll see. Um, I actually got to try some bread, but I got to hold off on that. I got to go back to some strict eating for a couple of weeks before I'm going to try some bread.
All right. Bob saw your tweet faster than 3 minutes per mile.
She's not running 3 minute miles, Dr. M. She said she's running the first 0.83 in 3 minutes. So she's on pace for um, a 4 minute mile, but she has not achieved it. And I can't beat her in a race. I just kind of wanted to see if I can get her fired up a little because that always gets her fired up. That's Emma
Uh,
Moulton, who was on the podcast, and she's been running it. She goes back and forth between Dallas and New York. And when she's in New York, she runs in a very short area, just back and forth till she completes a mile. But she was a high school. I think she was cross country high school, I believe. But so I can't outrun her and I can't outthrow my wife. So I'm getting emasculated left and right.
well, there you go. George wants to know will you do a Bob only PTP live stream? What kind of question is
Wow.
that?
Then we're going to triple the subscribers and they're going to be so disappointed afterwards.
Yeah, then it'd be back to me, and like everybody would have
Everybody
wasted
would just
that
leave.
click.
Oh, Tom Tom is long gone, Dr. M. And good riddance to him.
Yeah, it is quieter, but we haven't seen Coco recently. There's been no Cocoa Puffs.
Yeah.
Oh
Coco,
well.
don't worry.
All
It's been a
right.
month.
We got this is the final big Powell speak before the blackout. Well, the blackout period technically is until Saturday starting, but this is the last
Yeah,
time
this
we'll
is
probably hear from Powell, right? Anything? Any thoughts on that? Any new thoughts on the rate hikes going into uh, December 14th? Any thoughts on what are your thoughts?
So I thought it was interesting that the probability of 75 has been increasing. I think honestly that's a little surprising to me. From say early last week when we had more of an 83, 85% chance of 50, and it's kind of creeping the other direction. I honestly would be shocked if this next meeting was 75, unless Powell says something to that effect. What I suspect Powell is going to say is he's going to reiterate that while inflation has pulled back in one set of numbers, right? When is it? Thursday? We get another set, the PCEs.
Yeah, we get here. I'll just review because it's so backloaded. Tomorrow we got GDP and
Right.
the PCE. Which PCE
It's
numbers?
a
We
quarter
got
over
core
quarter.
PCE
Right.
prices,
Yeah. We don't
and
care about that.
then
Then the next day.
then on Thursday we have the PCE price index, both core and headline year over years, and the price index month over month.
That's what we're looking at. Um, if Powell is like uber hawkish in this speech, I would expect those numbers will not have pulled back much. But I think Powell is going to more express how they don't have to ease. You're still seeing easing being priced into late 2023, which is possible. But it's, to me, it's not likely. Um, there's starting to be a little groundswell of no recession. It's very small, but we're starting at a groundswell of no recession. You're just going to see unemployment come up, but jobs are so strong and the labor market has been so tight for so long that there'll be a lot of jobs to absorb those. Georgie Porgy wants to know if I still think this quarter is going to end green. I do. Well, one of the things I was looking at is PE on the S&P right now is about, well, EPS, I should say, is about 17 times earnings, 17 times forward earnings.
Mm-hmm.
But if you're buying that into a recession, it's more like 20, simply because the earnings are going to come down. The estimate has to come down. So if prices stay here and earnings estimates or actual earnings come down, it ends up being more around a 20 or a 21, which is expensive, especially for a recession. We had the 2s10s go to the biggest inversion. Again, I don't remember who asked me on Tuesday. Still not missing anything. There's no correlation that I've seen. Maybe someone can send it to me if you've seen it, to where the depth of the inversion or the length that the curve is inverted somehow dictates the depths or the lengths of the recession. Haven't seen anything like that. Haven't found anything myself. But you have to go all the way back to 81 to have an inversion as deep as the 81 basis points we got to intraday yesterday. We might have gotten lower than that. I only saw 81 though. So I find it hard to believe we're not going to get into at least a mild recession. I said before that I thought the recession was going to be mild but sustained. I still think that's the case. But if it's not, why would the Fed ease? That's what I keep thinking. If you have inflation coming down even to 4.5%, 5%, let's call it 3.5%, 4%, right? We obviously, if you're looking at CPI, goods are 40% of the CPI figure, and good prices are coming down. Food prices are coming down. Obviously, energy prices are coming down. Mike mentioned crude oil in his opening remarks. Copper's a little bit of a recovery in it right now, but not much. If goods prices are coming down and it's 40% of the CPI, you could look back and see, and something I've been looking at is services inflation never reverses. So whatever services level inflation we're getting is not only sticky, it's likely permanent. So it's going to be quite a while before the economy adjusts to that and you get inflation at a 2% average again. And if you have that and you have unemployment at 6%, but yet you still have, well, let's call it unemployment at 5%, 4.5% or 5%, and you still have GDP growth, why would the Fed ease? Like, what would cause them to ease? So for those people who don't believe there will be a recession, then there certainly is not going to be a Fed easing. And then the second thing is, I sound like a broken record here, but if we get into a recession and joblessness doesn't explode a little bit, if we don't get a much higher unemployment rate, again, the Fed would not ease, because you'd have inflationary pressures and you'd have people still working to absorb those inflationary pressures. If you think about the goods prices falling, and then you add in the 8% Social Security bump that we got from last year's CPI, and then you add in the fact that savers can now earn above the rate of inflation on some longer dated treasuries, I don't see any reason for them to ease, because there's still going to be pressure on prices. There's still a period of a stronger consumer that's built into this market right now. So Fed, I don't think is going to ease. I think earnings have to come down, and I think that spells a little bit of trouble for Q1 and Q2 of next year.
Yeah, definitely. I mean, if there's even a moderate earnings pullback, the market's priced to perfection at this point.
Yep.
So that's one thing. And the more the market does hold up and even continue to rally, you're actually getting easier financial conditions.
Yeah.
So it's it's counterproductive in some ways, but The market will do at the end of the day what the market will do. Bob's
It's about as
outlook.
accurate as a statement you can make.
Bob's outlook are much appreciated. CNBS mentions 50 basis point rate hike most likely set up for a disappointment for the bulls.
I
Huh.
mean, I don't know. Do you guys think that 50 basis points would be disappointing to the Bulls? I think it's kind of what the Bulls want. But I could be wrong about that, Dr. M. I mean, to me, the market started getting its legs underneath it as the probability of 50 basis points rose over 75 basis points. But I think either way, at least for the fourth quarter, Dr. M, the the die is cast. People understand that the Fed is hiking rates, and they've kind of owned it. You kind of been like, okay, fine, they're hiking rates, but they're almost done. I feel like that's the attitude overall that I've been kind of coming across. And that's fine. That's not wrong. But then it's a matter of unemployment. And that's why I think that like this next maybe PCE is one of the last price gauges we're going to care about, because you're going to start to get base effects next year on the year over year CPI figures. And so even if CPI rises a little bit instead of a lot, the year over year CPI will look a lot better. A lot better. That's going to start probably, I don't know, what would you say, Mike, February or March of next year, maybe?
Yep.
And you'll start to see the year over year numbers look pretty good. That's why I said stop looking at year over year now and watch month over month. But then we're going to start looking at the unemployment rate and wages and things like that, the quit rate. We want to start looking at things like that to see if the month over month is still growing at, say, 0.3 to 0.6%, and we start getting job increase, or I'm sorry, we don't get an unemployment rate increase month after month after month. The last 2 months, it's gone up a tenth, 3.5 to 3.6 to 3.7. That's likely going to accelerate. And if you're looking at the tech layoffs as part of the reason, that's not part of the reason. That's a very small part of the overall labor picture is tech layoffs, less than 1%. It also stands to reason that tech would be the sector that overhired during the pandemic. So, a little bit of those layoffs, it's like it's fine. But if you start seeing more what Mike and I would call the traditional economy, if you start seeing layoffs there, that's when it's going to start to affect the unemployment rate dramatically. So we'll see. I mean, this Friday's data matters a lot, probably more so than the PCE to me.
Any thoughts on Black Friday sales figures or anything else or anything you read about that?
I heard conflicting reports, Mike. What have you heard? I heard low end of normal, and then I heard blowout numbers.
Well, I
So I
heard
don't.
it was up, but then if you adjusted for like the overall spending was up, but
Yeah.
inflation adjusted, it was way below last year when you adjust for inflation.
Okay, that makes sense now because it was Kenny Polcari talking about huge sales numbers, but Kenny doesn't always take deep dives. Like it was on his daily update, and he doesn't always take deep dives in everything he's talking about. Similar to like when I do the Your Need to Know for the CME group, it's a 2-minute video, so I don't go into what the numbers mean. I just talk about them. And the other one was more of it was an article I read that said that they were on the low end of normal. That must have been in terms of traffic and actual goods sold.
I mean, I just did some general recon around here,
Mm-hmm.
and I was shocked at how low the traffic was at a couple of the malls I went by.
Yeah.
I mean, I was shocked. So now people I know have been spending more, and the trend's been more online. So it will be interesting to see a lot of these final numbers come out when it takes into account online shopping. But even I read the things, it was up 2.7%, but that was on inflation adjusted. And
Yeah.
and when you're running inflation at 8%,
It's a big problem with retail sales figures in general, right? And I agree with what Connor says in here. I read a lot of Black Friday sales were buy now, pay later. I read the same thing. And you're still seeing credit card debt going up. Credit card debt for Americans is rising rapidly. And the problem with that, one of the problems with that, is it starts on the low end of the socioeconomic structure and climbs from there. Those are also the people who are hurt by the butter and egg shortages, Dr. M. Same people hurt by that generally.
Yeah, there's
So
the doctor I'm putting in here. Well, geez, there's been shortages at a lot of stuff at the Costco I go to. I go back and I'm like, you're out again. I mean,
it's almost normalized since the pandemic, honestly. Like I go into a regular grocery store, which is now a Winn-Dixie for me, right? Go into a Winn-Dixie or a Publix. I don't have Piggly Wiggly, Mike. I wish I did. But go into a Winn-Dixie or a Publix and go get some coffee creamer for my wife. There's only like one brand available, and there's a bunch of empty shelves. It's very strange looking. And it was super strange as the pandemic started to go in and look for toilet paper and paper towels and countertop cleaner that had bleach in it and find everything gone. It's like we're in World War II Poland. And to a certain degree, we haven't recovered from all of that yet.
I even went to get I get bags of broccoli from the refrigerated section. You know, the already cut up ones because it's just easier.
Oh, yeah. Yeah, you are lazy. Go ahead.
No, yeah. Well, you know what? It was on sale. It was actually on sale at Mariano's, and I
The
could
chopped
get it.
mushroom
It
is
was
really
on
cheaper
sale
than
for 99 cents for like per pound per big head. So that I bought it then when it was on sale. But normally I'll just grab the bags because I'll stick it in my oven, set it to roast every night, and I got good roasted broccoli. I went completely out for 6 days of broccoli. How can you be out of broccoli? I
broccoli
mean,
is gross.
what is this world coming to? So I went yesterday because I was driving by it. I'm like, all right, they got that broccoli in. They just got a shipment in. I grabbed 4 bags. I felt like I was hoarding broccoli. I mean, how
I don't
bad
know
is
if
that?
I don't know if my brother's in here or not, but he's always someone good to talk about cost and the availability of food sources because he owns a restaurant. If he's in here, he'll probably comment now, but he's somebody that I go to, anytime I have a question about that stuff, and he'll always have, I used to pay this, and now I pay this, but the rhetoric is that food prices are coming down. But if you look at sort of a general food index from Bloomberg, they've come down, but they've come down to the start of last year, which was already up about 30 or 40%.
There's a lot of stuff that's not coming down. Like ground beef around here it keeps going up. It's like
Yeah.
going insane. So
And then fertilizer shortages, it's just a nightmare.
Connor, I read that same thing. Thank you for pointing that out, Connor. I read a lot of Black Friday sales were buy now, pay later. The pay later rate was up huge. It was like up 71% year over year of people.
Hey, we got somebody saying hi from North Korea. I'm assuming that's North Korea.
Or it's the North Korea area. That's
Yeah.
uh,
Which is
so
just
yeah,
above the South Korea area.
so yeah, people were buying. Also, that they're financing it for extended periods of time to be able to pay for stuff now, and you see credit card usage going through the roof.
Yeah.
So yeah, it's going to get interesting. What else do we have? Yeah, I saw that Jeff Bezos said, "Don't buy new things and save your cash."
I don't
I
even know what that means.
he was stressing to people to don't buy stuff they don't need. Save your cash. He was talking about going into a substantial recession. I'll have to put
Mm.
my yacht on hold then. No yacht for me. Uh, let's see. Thank Daniel. Beef will be in short supply because Midwest farmers are reducing herds due to drought and lack of cheap local food for the animals.
Yeah.
Uh, George is asking Bob, I heard the Credit Suisse issue is still with us. Any insight? Well, you don't want to be owning the stock.
No, stock is horrendous. Credit Suisse just sold their wow, is that idiot? It's just gap lower after gap lower. Um, Credit Suisse just sold their Canadian division to RBC for 13 billion, and that's not even enough influx of capital to pop the stock. So yes, it's with us, and yes, it's not going anywhere anytime soon. You still got the crypto fallout coming now with BlockFi with their bankruptcy.
Yep.
It seemed to me like that's over yet.
No, there's a lot of stuff. But would I be trying to bottom pick in Credit Suisse? No.
No, absolutely not.
No.
No,
That is, yeah, I just haven't had a lot of time. I was going to do a video that, unless this could ever get above the rotation zone again, like on the weekly basis, don't touch this thing. Uh, let's see. Broccoli is important for your fresh dog's food. No, broccoli is important for my food. The ground beef is important for the dogs. They get fresh ground beef.
yeah, it's very nice of you.
And 5 dogs with fresh ground beef? Oh,
Wow.
you know,
I have
before
been
this
to your
whole
house.
mess started, I could get fresh ground beef at Costco for $3.49 a pound. It's now $5 a pound.
I've been to your house. Your house doesn't smell like you have 5 dogs.
No, that's because I overwhelm the dog smell.
You're a pretty clean guy. All right.
Uh,
Why do you think Powell decided to talk tomorrow?
he's got where is he speaking? He's speaking at the Brookings Institute or something.
Yeah, a lot of these things are
This
they're pre-scheduled. Like you could go look at a Fed schedule for a year ahead of time. So I wouldn't necessarily think, Chris, that he decided to talk tomorrow. It's not like he called a press conference. It's likely a scheduled speech. It could have been scheduled 6, 8 months ago. We don't know.
This was not like off the cuff. I need to say something before the quiet period. This is like a Jackson Hole. It's not on the same par as Jackson Hole, but this is like a planned event. Like, hey, he's going to be speaking at Jackson Hole. I think it's the Brookings Institute or something.
Right. And part of the reason that you might get something market moving out of him is because those kinds of speeches are very heavy on Q&A. So someone is obviously likely to tap him with some questions that could provide provocative answers.
Yeah, we got to pay attention tomorrow. The next 3 days, and then we got non-farm payroll, which we didn't even touch on, coming on Friday. So these next 3 days, there's going to be lots of potentially market moving information coming out.
Yeah.
One other question: any thoughts on the dollar index? Finally, looking like it's trying to put in a short-term bottom. Any new macro thoughts on dollar?
The dollar was interesting today because it was down it was down the most against the commodity-based currencies, other than Canada, which I thought was interesting. So in other words, New Zealand and Aussie, it was down against those about 0.5% each, which I thought was interesting because the Hang Seng is putting in like the best month it's had in a while. And same thing with the yuan. Yuan's having the best week it's had in a while. And obviously New Zealand and Australia has quite a bit to do with the health, and their health and welfare economically has quite a bit to do with the health and welfare of China. So I suspect it was more on balance about the potential of China to ease COVID restrictions. And I don't necessarily think they went in that direction at all. I think they just announced that they had fewer cases, and most of those cases were asymptomatic. But they certainly didn't say that they weren't going to weld those people into their apartment building just because they were asymptomatic. They didn't say that. So it's probably a little premature, but China have to come out of COVID zero at some point. And then the secondary part is they made it even easier for builders to raise money, and that helped the commodity space a little bit, which again helps Australia specifically, but New Zealand as well. It was interesting to me the Canadian dollar was weak against the US dollar. So I think, the dollar's probably put in an ultra short term bottom. I don't know how much farther it's going to go than this, but overall, I still think that the U.S. economy is likely to come out of the aggressive tightening faster than anybody else. But I could end up being completely wrong about that because the EU and the UK specifically are catching up to inflation expectations in the US in a rapid manner. So, recession expectations. So if the US doesn't go into a recession and the other two do, I mean, the dollar's off to the races again. If the EU and the UK go into aggressive recessions and the US just goes into a mild one, it's off to the races again. So 2 out of the 3 possibilities fundamentally are stronger dollar, in my view. So we'll see how it plays out.
Business person just joined and asked, did we cover crude oil from Bob? Not really. So we'll cover it now.
Not really. So I still, I've told you guys this before that I was long short term and short long term. Actually, let me rephrase that. I wasn't actually short long term. I just said I thought 65 was going to happen before 105. Nothing that's going on right now changes my mind on that. Although December 4th, there's an OPEC meeting. And the conversations around this meeting are starting to go toward another production cut. Now, I don't care about the production cut at all unless it's an actual cut, not just a dropping of the quota that they're not reaching anyway, right? So if they actually go to the amount they're producing now and cut from that, and that, based on my calculations, would be about 1.5 million barrel production cut. I don't know if they'll do that December 4th. I don't know. But that's really the only thing in the short term that's going to drive my view away from the $65 target on crude. On what's almost a separate subject, I thought it was really interesting that somehow global warming is not affected by Venezuelan drilling, but it's affected by U.S. drilling. I thought that was very interesting. The administration continues to try and produce oil in whatever way they can without producing it here. So the shale revolution is over. It's over. It's not coming back unless there's a dramatic change. And that means higher crude oil prices in the long term. It's almost unavoidable. Because as we come out of this economic slowdown / recession, there's not going to be enough crude for it. There's not. And you're not going to be able to shift to renewables as quickly as has been promised. And even if all of a sudden you get a shift in Congress and a shift in the White House and a shift in policy, it'll be 18 to 24 months before any of that even produces a promise of fresh crude oil on the ground here. So we're in a short-term weak spot. And if you have somewhere you can store gasoline, store it. If you have a bunch of big tanks in your yard, you should fill them up.
What about the potential of refilling the SPR around $70?
All that does is temporarily bottom us out at $70. And that's likely to happen. And it just seems to me to be one of the more ridiculous things given the momentum to the downside that crude oil has. It's probably part of the reason we stopped at that 71.60 that we did yesterday. I'm guessing on the price. I think it was somewhere around 71.60. That was the lowest level since December of last year. What was the low from yesterday, Mike?
73.60 on the front month.
73.60. That's the lowest level since December 27th of last year. Yesterday's low.
Yep.
And it's likely because people think they're going to be refilling the SPR at that price. I suspect they won't refill the SPR at that price, even though they promised they would. It's not legislation. They're not bound to do that. And again, nothing would screw the oil companies more than going, we're going to let it go a little bit lower before we refill it. That's a short-term fix, if it's a fix at all.
It's interesting sort of how that lines up with the targets from the double top.
It really is. It really is, Mike.
I mean
these things they're almost subconsciously baked into the markets via price. It's amazing.
All right. Well, I think that's about it. I don't have any other questions. Are you able to come back Thursday?
Yeah, I'll be here Thursday. I'm also going to be on a space tomorrow, although a Twitter space, but I have no idea how to find it. Honestly, I don't really like the person who's running it, but I like the main speaker, and she invited me, and she was a guest on our podcast. It's a Shy Girl, Tracy Shukart. She's the one who invited me to be on it. I don't really like the guy whose space it is, but I'm doing it as a favor to her, and it's going to be after the EIA numbers tomorrow, so 11 a.m. Eastern time,
Won't
and
you
I'll
put
be
that
on
on
that
your
space.
Twitter feed?
I retweeted the announcement of it, but again, I was retweeting the guy I don't really like, so I retweeted it once. I'm doing it as a favor to Tracy. I'm not really doing it for anybody else. So, but if you guys are around and you see my Twitter profile lit up that I'm speaking in a space, it'd be nice to see some of you in there.
Now, didn't Shy Girl relocate to Florida?
Yeah, she's on the other side of the state.
So doesn't she have to change her Twitter handle?
I don't think she will. I can't change my Chicago tattoo, so I don't think she has to do that. You guys see this?
Well, you could turn it into another something. Yeah, what? No, you got to move over. Yeah, it's the Chicago flag.
And it's got the skyline as the top of the flag, which is not the way the flag is, but
That's very nice.
anyway, I can't change that, so she doesn't have to change her Twitter handle.
All right. So, thank you for being on.
Yep.
And
Hey, and if any of you do come onto the space, make sure you say, we follow Mike Arnold really closely, but we don't know about you guys. Just throw that into the space.
yeah. Why don't you plug me on the?
Yeah, she said she's going to allow to plug the YouTube channel and the podcast, so that's another reason why I said it. But I would have done it for Tracy anyway. She's a great person. But yeah, you guys could just come on there and be like, hey, this is the greatest channel ever. We'll see how many people show up to this thing. But Dr. M, we'll see you tomorrow.
All right. Thank you, Bob.
All right, guys.
All right. Bye.
Cheers.
All right, everyone. Let's just go over a couple things real quick. So you can see here, let me hide some of this stuff. You can see here still holding the daily rotation zone, holding this low range, these upper 3940 areas, still pulling back. What's interesting, tomorrow, if we do break above today's high, that's what I'm watching. Why am I watching that? Because we have a percent B buy entry with the rotation zone. So on a break above today's high or any other front run pattern, that's key. And then if it closes above that high, we could get another bounce. Another bounce back up to the most recent high area would also invalidate the double that has not triggered or confirmed. I should say confirmed or triggered. Now, that being said, we technically closed a hair below the 62.5 after hitting the 75. So, it's going to be very interesting, but with the rotation zone, if we do close tomorrow above today's high, it would be a percent B buy, and we could easily go up and tag that 200 again. If we break down tomorrow with the mixed probabilities, we could then go back to the bottom of the rotation zone, which is roughly the 87.5 harmonic, which is coming in at right around 39.13 area, right at the bottom of the rotation zone. Or we could technically see that before a snapback move. Cycles aren't at the bottom yet for the daily, and on the weekly, there's my weekly. And on the weekly are still trying to roll over. So, that's where we stand. But nothing's invalidated that double top. By the way, the potential double from earlier today, which never triggered or confirmed, of course, was off the table with this sell-off. And as I highlighted this morning, I was watching 36.51 to 39.46 for some key support, and that's what we got. And then the little rally back move to the 1 hour rotation zone. Overnight, now I'm watching this breakdown area about 39.68 is my first level of key resistance, and support is coming in by today's lows. The NASDAQ did close again, closed even below the low from the 22nd. So closing, I'm watching for this channeling pattern back yet and on a continued pullback about 11,375. is what I'm watching for on the pullback area. Just going to go through some stuff. The Dow pretty much holding up flat with the doji. So a doji Dow today, and the double, which never confirmed or triggered, is off the table. But you can still watch roughly about 33,950 for the breakout area. What else did I want to touch on? Notes. Now I want to point out a couple stock things, and then I won't waste anybody's time. Yes, there is this little mini. We got so many double setups. It's ridiculous, but we have to wait till stuff triggers. You have a very mini double, which needs a short-term close, like a 1-hour close above 112.30. Within that, we still have the potential double bottom, which would probably start getting invalidated if we triggered this mini double. We have this double top, so the double top would be invalidated if we triggered the mini double bottom. We're still within a triggered bigger double bottom that is hit the first stop level. So it's a lot. We're waiting for the next move with the notes. And the only thing, though, even on a pullback with this double top potentially triggering, does not invalidate the double bottom. We already talked about the dollar index with this move up. Watching for now closing into the rotation zone. Not yet closing above the 62.5, which was what I was hoping for today, because then that shifted the probabilities pretty substantially. So that's what I'm still watching for. Nothing has changed with crude besides triggering the aggressive %B buy, which would be a front run to this potential double bottom target, but it already hit the rotation zone. That's why reward to risk was not good there. Bitcoin not doing anything. Tesla still in this little sideways movement. So we have the key breakdown level about 179 and the breakout level about 186.50. Other than that, nothing else to do there. Some stocks that I am watching. Again, Apple closing below the 62.5. We still have the gap left behind. So any weakness, watching for the return to 136.78 and then the gap fill. Even on a rally now, would be watching for the next rollover play. And a minor rally does not change the probabilities with Apple. Amazon, by the way, does have a little mini double bottom. Potential double bottom. It's not confirmed or triggered yet. Would need a close above 96.40 to trigger. Also, remember, there is this big gap down still. Or not a huge gap down, but it's a gap down that wasn't fully filled, and that's roughly at the first target for the potential double. So I am keeping an eye on that. Other than that, it still favors lower prices unless that potential double is triggered. AMD, inside day today, still watching for that. CCL, interesting. This is not a stock I normally play, but it has a beautiful horizontal channel. And you can see there's some key resistance back there in September, and the key support's been building. But what's interesting is if it does break above around this 980 area and can sustain it, it tried a little breakout, fake out back on Friday in the lower volume market and closed back into the channel. But this is an area, if you're looking for a stock, I might set up an alert on this one. Because a breakout here, you have a big gap to run into. Okay? You have some gaps left behind, so there could be some upward magnets to that. The only downside is these cycles are back at the top on the daily, and the weekly's rolling over. So if you're going to try to play this, it has to sustain a close above there. What would be interesting is if it can't sustain a close and closes back in, it could potentially wind up into a shake and bake pattern based off of where the cycles are. So just pointing that out because it could be playable either way. So that's where we sit with a couple interesting things. NVIDIA still has a potential double top on the table. Other than that, oh, Shopify. Shopify was another one. Shopify, which we haven't really touched on in a bit, but it did finish that inverse head and shoulders move, completed this, but now Shopify has a potential double top. Keep an eye if you're looking with cycles at the top on the daily, cycles at the top and rolling over on the weekly. This could be an interesting short trade or pullback trade on Shopify. Needs a close below 34.38 to trigger. Targets 31.50, and this is the move that started it, not just this one. So it is still valid, and you have a gap. You have a big gap still here between the 9th and the 10th. And the gap for the full gap fill is even below the stop reduction on the double top. So there could be an interesting play, and then there's still a gap left behind between the 26th of October to the 27th of October. So there's gap magnets below should this trigger. So that's what we are sitting at. That's some things on my radar screen. I'm just not finding a lot of great long plays right now. They're hard to come by, which is very, very interesting. This Bank of America is not a valid double, by the way. So that's where we sit right there. And that's about it. That's where we sit. Remember, financials have been strong. I covered that in the sector overview. So things like Bank of America, if you get that you have this little pullback channeling pattern, if you do get some breakouts up here and it holds the 200, it could be interesting for some short-term plays once we regain some market strength. Do not ignore some of these financials for continuation plays that are having a nice little pullback. Also, no, it wasn't a double, but it is a nice little pullback trade holding key support right here. So keep an eye on this if you're looking for other stock plays because of where that financial sector is that I covered in the sector overview. With that, I shall talk to everyone tomorrow morning. Thank you so much for being here. Thanks for tuning in. Bye.